Yes, that's up absolutely fine. Thank you.
Right. Okay, so yeah, as Jo mentioned, obviously this is our understanding of how the rules may apply, but obviously everyone's individual businesses are going to be quite different, and yeah, so you'll need to do your own assessment of how they may apply to your firms in practice. So why a new consumer duty? So I think the FCA have spent years doing different consultation papers, issuing Dear CEO letters, different publications on different topics where they've seen consumer harm across different financial services industry sectors. And I think that, you know, they weren't getting to where they wanted to be in terms of getting firms to really focus on customer outcomes. So they've developed a new principle to add to their current 11, which sets a higher level of consumer protection across the financial services industry. They want firms to put the customer's needs first. So they felt that their existing principles weren't enough. So they've added another one with a raft of different rules that sit underneath it. So obviously this isn't specific to consumer credit. It is relevant to mortgages, investments, pensions, insurance. So how it's set out, it applies to every single financial services firm that's regulated in the UK. So and there are a lot of new rules. So it's trying to decipher how it applies to our firms and the sector that we work in. So the FCA initially came out with their consultation on the 7th of December 2021, sent it out to all firms and asked for feedback. There was very little that they changed following the consultation paper, and they issued the final rules and guidance in July last year. They gave firms a year to implement the rules for new and existing products, an additional year for a review of any closed products. There's a couple of additional timelines within that year. So they asked firms to create an implementation plan by the 31st of October last year, just to make sure that firms had fully understood the rules and what's expected of them, and to ensure that it's gone all the way up to board level, should they have a board in their firm, and that they had a nominated person that was going to take responsibility for ensuring that those implementation plans were delivered on time, and to meet the FCA's expectations of the new rules. An additional timeline that they've added in was the 30th of April. So they wanted to ensure that all firms had completed a review of all their products by the 30th of April, and that they were able to communicate the outcome of their product review to the introducers by that date. So they're the key dates. There is a lot of information on the FCA website. So they do have a dedicated web page. There are a number of different publications. You can find the policy statement on there, the finalised guidance. They also have webinars and a lot of different news and updates as we're going through the implementation period. So we've got currently 11 principles for business, so that's how they're set out at the moment. You can see in there you've got principles 6 and 7, which I've highlighted in green, where they're technically the kind of treating customers fairly principles that are in place today. So you've got firm must pay due respect to the interest of its customers and treat them fairly, and communications, making sure that they're clear, fair, not misleading. So what the FCA have said is that they're bringing in a number 12, which is a firm must act to deliver good outcomes for retail customers. So they have said that where Principle 12 applies, 6 and 7 no longer apply because it sets a much higher level of standard than the current 6 and 7. So with this new overarching principle, Principle 12, underneath there's a series of cross-cutting rules. They're essentially conduct rules to ensure that firms are acting in good faith, they avoid causing foreseeable harm, and that they enable and support customers. So they're the conduct cross-cutting rules that support the principle. And then there's a layer underneath of rules that cover 4 different outcomes. So you've got the products and services, price and value, consumer understanding, and consumer support. So those outcomes underpin all of the overarching principle. So where they've said retail customer, we know today, obviously, we use the terminology customer, obviously working in business finance. We know that this applies to individuals, sole traders, partnerships of 2 or 3, and unincorporated entities. That's the current customer definition as we know it. You'll see actually throughout these slides and in the policy statement and the new rules, the FCA have used the definitions customer, consumer interchangeably, and you'll also see customer, retail customer. Technically, what we know as a customer, it applies in exactly the same way. So even where they've used the words consumer or whether they've used retail customer, it's technically that there is no change to what we know as a customer definition today. So for credit broking purposes, it includes your individual sole traders, partnerships of 2 or 3, and unincorporated entities. And it applies in the same way to regulated agreements for business lending and personal use assets. So you've got the business use exemption. So yeah, there is no change whilst the definitions might be different. So previously, a consumer or retail lending generally applied to personal use assets. So that's no longer it's no longer defined as personal use. It covers everything, anything within scope of regulated credit activities. It also applies in the same way to prospective customers as well as actual customers in the same way it does today.
Just on that slide, I've just got a question about the definition of retail customers, as the FCA definition of retail consumer is an individual who's acting for purposes which are outside his trade, business or profession, so wouldn't apply to sole traders. What's your view on that?
A sole trader is technically an individual. It's within the current scope. So they've in the new rules, in the new glossary definition of in the policy statement, they have expanded retail customer. So it's not it now includes all regulated credit related activities. It's not outside of business purposes.
Brilliant, thank you.
So how does this apply across the distribution chain? So effectively, the new duty does apply across all firms that are involved in manufacturing a product, provision, sale, and an ongoing administration or management of a product or service. So to confuse matters, they've come up with a new terminology whereby anyone that creates or develops, designs a product or service is called a manufacturer. So it's a manufacturer, obviously that's specific to the finance product. So not anyone that's, you know, manufacturing cars or tractors, or it's only in relation to finance, but obviously it is a little bit of a confusing term. But you'll see as you go through the slides, I've kept with the terminology of a manufacturer, but technically that is a lender who, or in for us and the market that we are in, because we create, develop and design the product. And then you've got a distributor. So technically anyone that is offering, selling, recommending, advising that product or service. So they're not the creator of the product, but they are taking a manufacturer's product and they're distributing it out to customers. So they are technically called a distributor, which will be most of you guys as you distribute products on our behalf. The duty, the rules that sit underneath the duty, it does depend how they apply to you, will depend on actually the nature of the role and responsibilities that you have and any influence that you have over the outcomes of those products and services. Just to confuse matters, whilst you've got a very clean determination, I suppose, between a manufacturer and a distributor, there is a little bit of a grey area in the middle, which they've called co-manufacturing. And that's where you may have, for example, an introducer which says, well, actually, yes, you may have designed this product, but I want to change some of the features, or I want to set different pricing for my customers. I want to distribute it to a different target market to what you've defined. And then in those situations, a lender may work with an introducer, for example, and they may come up with something new that they're going to go out and distribute to customers. Where this happens, or if you've got any scenarios like this, then it needs to be clearly documented in a written agreement which sets out the roles and responsibilities between the two firms, and it will clearly define who's taking responsibility for what under the terms of the duty. So if for example, if the introducer says, right, okay, I want to have different pricing for my customers, they would then need to take responsibility for ensuring that that's fair value under the price and value outcomes. And that would be documented and signed by both parties. So it's always going to be clear on who's taking responsibility for those areas of the product. For the purposes of today, I'm going to keep it simple and keep it looking at it as a manufacturer and a distributor, because otherwise it gets a little bit grey. So consumer principle, act to deliver good outcomes for retail customers. So what the FCA want firms to be asking themselves is, am I treating my customers as I would expect to be treated in their circumstances? Are my customers getting the outcomes from my products and services that they would expect? So what they really want, the FCA want firms to pay real attention to the needs and characteristics of that customer and consider what's reasonable given the circumstances. They have made it clear that it doesn't remove consumers' responsibilities for their own choices and decisions, but they really want that, you know, the idea is that actually customers should be able to trust that range of products and services that they're choosing from. And that they are designed to meet their needs and offer fair value. So they're only really expected to take responsibility for their actions when they can put their trust in those products and services. So the conduct rules that sit underneath the overarching principle it's really kind of, it is technically as we know it today. These are all the things that, you know, we have in place today, and it really sits as like treating customers fairly. But that layer underneath the outcomes based is what we don't have. Like, we're not testing that actually we are applying all of these things. So acting in good faith, the FCA expects us not to mislead customers by disguising risks or burying important information in the small print. Don't provide incomplete or distorted, skewed information. Don't have frustrating systems or processes in place which makes it difficult for customers to navigate through a product or service. Don't ask any misleading questions. And if harm has been identified, take quick action to rectify the situation. Act quickly and learn from complaints and financial ombudsman's decisions. We want firms to avoid causing foreseeable harm. And by doing this, they should be analysing their complaints data, MI reporting, keeping up to date with what the FCA are looking at and telling us, taking appropriate action where they have identified harm and they act quickly. They test their communications and consider information needs of customers. Apply flexible support approach considering individual needs of customers. And then to enable and support customers. So at the point of decline, for example, give them some advice and or help, and signpost them to debt advice firms, for example, Money Helper. Don't use complex product features or apply unreasonable exit fees or unreasonable barriers for cancelling or switching products. So they're the conduct rules, and most of those will apply to all firms. And then I'll go through each of the products, each of the outcomes. So the 4 outcomes that sit underneath the conduct rules. So this is where there will be specific requirements on firms, how they can achieve the overarching principle and conduct rules. So the first outcome is the products and services outcome. So I've split this by, you can see a column where it's a manufacturer requirement, and then there's a separate column for the distributors, and then the date by which these requirements come into force. So as mentioned on the first slide, there is an interim date of the 30th of April. So by that date, all manufacturers must have reapproved their existing products or services. They should have identified a target market of customers for whom a product is designed. Ensure those products and services, including existing products and services, are designed to meet the target market needs, characteristics and objectives. They can do this by completing their product reviews and testing. They need to consider the needs of customers with characteristics of vulnerability in that target market and develop an overall distribution strategy appropriate for the target market. So, for example, we may have a specific product which is for a niche sector of the market. So, for example, may have a loan product for fertilizer for farmers specifically. Now that there's a specific target market for that product, if there's any, we'd need to review it to ensure that we've identified any specific features of that product. Does it meet that? Does that product really meet the needs of that target market? So it's really for the manufacturers to really test and review their products. I mean, this is at high level, but obviously the FCA have set a number of specific requirements underneath each one. So all firms are required to complete reviews of all products or services and define certain cohorts of customers and whether that product is applicable or appropriate for those customers. So once that's been distributed, or once that's been those products have been reviewed and we've created a distribution strategy. We need to regularly review our products, so that will be completed by the 30th of April, and then by regular review, I don't know what it's going to look like, but perhaps annually we'll do a regular product review. I think they would expect, if it's a more high risk product, then that we would do more regular product reviews, but it's likely that they will be annual reviews. We need to ensure that the product is meeting the needs and characteristics, objectives of the target market, and that the distribution strategy that we've set out, it remains appropriate for those customers, and that it's actually being distributed to the customers in the agreed target market. So that's the responsibility for the manufacturer under the products and services outcome. For the distributor, they will likely have received, or they will need to have received, for any products that they're distributing by the 30th of April, they will need to have received from their lenders a copy of their distribution strategies. So it will need to set out how they want it to be distributed and who it should be distributed to. So they'll need to have the arrangements in place. They'll need to manage any conflicts of interest to ensure that remuneration or sales targets are not an incentive to recommend a product when an alternative would have better met the customer's needs. Need to understand the products and services they distribute, and a distributor should identify or create a distribution strategy. So it's likely under this section, actually the date's 30th of April, but the distributors won't have received anything until the 30th of April, so they will have until the end of July, when the new rules come into place, to get their own distribution strategy in place. So they need to take all of the distribution strategies that are received from their lenders, depending on how many they've got on their panel, and be able to understand those distribution strategies and whether they're different, and create their own. On an ongoing basis, they'll need to review the distribution arrangements, and if they're appropriate and up to date, if they've received any changes from any of their lenders, and make sure that they've understood and updated their own, and to ensure that their products and services are being distributed to the customers in that agreed target market. On request, so manufacturers will need to do a product review on an annual basis or more regularly. So where a manufacturer requests for information, distributors are expected to provide the relevant information. If they don't comply with this, the FCA have made it clear that manufacturers should be notifying the FCA if they're not getting the information that they need from their distributors. An additional ask is that any outside of whether they're being requested for information, if there's anything that comes up in terms of their ongoing communications with customers, that they share promptly where they identify any problems in the way a product is operating in practice. So the lenders can learn from any issues that customers are experiencing. The second outcome is price and value. So the requirement is for manufacturers to have assessed all of their products by the 30th of April. Obviously, when assessing the products, one of the key areas is the fees, charging, pricing. So the requirement is that all benefits and limitations are reviewed, that all fees and charges are commensurate with the work that's undertaken, that the total price, including over the lifetime of the agreement, is taken into account, and that it presents, I suppose, a fair value for the customer. So firms will need to go through this assessment to review all of their fees, charges, pricing, everything that makes up the total cost of the product. And again, this will need to be completed by April, so they can confirm to introducers that, you know, that product that they're going to distribute on their behalf does represent fair value for customers. So responsibility for the distributor will depend on whether they're charging their own fees. So if the manufacturer has completed their assessment that they believe their product is fair value, if there are any additional fees on top of that the customer is going to incur, then that distributor will need to do their own fair value assessment, taking into account the actual price of the product that's been defined by the manufacturer, plus any additional fees or charges that the customer may incur along the distribution chain. So any requirements there will depend on what, you know, you do as a business. So yeah, so where the manufacturer is setting the total price, which is including the commissions, then obviously the manufacturer is the only one that's responsible. If there's nothing else added to the total price of the product, then there's no action under this outcome for the distributor. Third outcome, we've got consumer understanding. Now this is going to apply to all firms across the distribution chain. Obviously the manufacturer needs to make sure that their communications are very clear and are likely to be understood by the intended audience, so customers can make decisions that are effective, timely and properly informed. They expect communications to be tailored, taking into account the characteristics of intended customers, making sure, you know, we're not using any jargon or technical terms, that communications are much shorter and more concise and presented in a simple way for customers to understand. They've said that where firms are dealing on a one-to-one basis, so this probably applies to introducers more than it would to us, for example, that they check with the customer that they actually understand understand the information that they've been presented with, and to check if they've got any further questions. They expect firms to test and monitor and adapt their communications to support understanding and good outcomes. They expect testing to be with the group of customers that actually the product is intended for. And it will depend on, depending on the nature of what your firm does, so you may just take that manufacturer's communications and pass them on to the customer, in which case you would not be responsible for testing those communications. But if you provide your own communications which support that manufacturer's product, then testing would be required and you'd need to keep an audit trail of what you've tested. You may need to share that outcome of that testing with lenders should they ask for it. It will just ensure that any communications are clear. Even where you're sharing manufacturers' communications, if you get feedback from customers and they find it confusing or unclear, you will be required to feed that back to the lender so they can make any changes or adapt their communications. And on an ongoing basis, firms need to be monitoring the impact of those communications and take action if they've identified any areas that aren't delivering a good outcome. And then the last outcome is the consumer support outcome, which is mostly around the in-life product, so after the point of sale. I think the key thing that the FCA were trying to get across was that firms need to be paying as much attention to customers in life to what they do at pre-sale. So they can be very attentive trying to get the sale across the line, but actually when the customers actually got their product, then the service can be quite poor. They can be waiting on the phone for a long time to get the service that they need or the support that they need. So by the 31st of July, the FCA expects all firms to have completed a full end-to-end journey of the different areas that the customer may need support with. So this is more for, I suppose, for us as we administer the product, to make sure that all of those different areas that the customer may need support with, that we deliver a good journey for the customer. So we want to make sure that there's no friction points, or we have any unreasonable barriers in place that would make it difficult for customers to get what they need from us. That we shouldn't be charging any unreasonable additional costs. So any costs that they may be charged in life, then actually that it is reasonable to the request, and that we're again regularly monitoring any actions so we can meet expectations under the outcome. So that's the 4 outcomes. So where I've mentioned where firms will be doing a product review on an annual basis, sort of requests that you may receive from lenders are things around probably numbers of complaints, types of complaints, root causes, how long it's taken to resolve, cancellations and declines, any outcomes of testing of communications if you're delivering your own, distribution of products, any fees and charges, feedback. So it is expected that firms that manufacture products, that they will be using the data and monitoring to improve customer outcomes. So they should be amending or adapting a product or service where it needs to be, adapting design, fees or charges, updating support processes, distribution channels, modifying any communications, and also acting on complaints, or if harm's been identified, that we address things promptly and pay redress where it's appropriate. So it's really, yeah, sorry
to interrupt you, Pippa. Just a question on that. Is there a definition or interpretation of the term harm?
I think, well, obviously that's going to depend on it's what the outcome is. So if it's been identified that it's been a poor outcome for a customer, so it's not necessarily, so it's, has it been explained to the customer, and could we have done something better, I guess. So if we've caused an issue for a customer that could have been could have been otherwise, I suppose, avoided, then yeah, technically I suppose that the harm's been identified, and we can put something in place to rectify that. So yeah, it will depend. It's effectively a poor outcome for a customer.
Thank you.
So just a quick recap of the timeframes of what it might look like, I suppose, from now going forward. So at the moment, manufacturers are completing product reviews of all of their different products. So there's quite a lot of work going on to understand different target markets, identify data that we perhaps may not have looked at. So by the 30th of April, a product review will need to have been completed. Also the fair value assessment, where all firms have reviewed fees, charges, pricing to ensure that those products do represent fair value for the customer. And also a distribution strategy, so identifying those target markets, particular cohorts within the target market and whether it's applicable to them, and also setting out who that product isn't actually shouldn't be distributed to. So making it really clear within a distribution strategy of actually what the product is intended, who the product is intended for, and how it should be distributed. So that work is ongoing and will need to be finalised and shared with distributors by the 30th of April. So that is a hard deadline. I guess most firms will probably hopefully hope to get those out earlier, but there's quite a lot of work involved in getting the meeting all of the requirements. There is an expectation that firms, if they believe that actually the product doesn't represent fair value, that they can no longer distribute that product to customers. So there is a lot of pressure on firms to get to a point where they can demonstrate that their product does represent fair value, because they won't be able to go out with a distribution strategy until they've done that. So that will be shared out with all introducers by the 30th of April. So depending on the number of lenders you may have on your panel, you may get a number of different ones. It also may depend on how the manufacturer decides to create their distribution strategy. Maybe they'll do it by product, or they'll put them all into one. It will depend on the interpretation of the lender, or how they go about it. And then the distributor will be required to fully understand the content of those distribution strategies that they've received and complete their own, so they know who the products should be distributed to and who they shouldn't, and who they're appropriate for. So in addition, if they're charging their own fees, they'll need to complete a fair value assessment and also review all of their communications. If they've got their own communications, you may have them on a website, or they may provide supporting documentation to accompany the manufacturer's communications. So any communications you're providing yourselves to support manufacturers' products, they need to be reviewed by the 30th of July. And then on an ongoing basis, there is a requirement to provide information as requested and to regularly review your distribution strategies and to act on any customer feedback and share with the manufacturers so they can learn. So anything at all, if it's in relation to in-life communications, price, value, anything at all, is, so the manufacturers of the products can learn and adapt their product or service. Yeah, so that was it. Does anyone have any questions?
Thank you, Pippa. That was brilliant, but very wordy, and I appreciate that there's quite a lot to digest for people. If you do have any questions, if you'd like to raise your hand, and between Katie, Pippa and myself, we'll go down the attendees and see if we can just get those questions answered for you. Alternatively, if you don't want to ask a question, please pop it in the chat and we can get to it later. Everyone's still digesting it. Nothing's come up. Obviously, as an output of this, what we'll be doing is it's an ongoing process. So whilst we're producing the fair value assessments and the product assessments, we'll be looking at the rules as they go forwards, and we are hoping that as time goes on, we'll run more of these sessions with some more specific detail pertinent to Novuna once we've got that detail identified. But at the moment, this is quite generic and high level. I can see some things popping into the chat as I'm talking. So we've got, how do brokers complete a fair value assessment? Is there a template for information required?
So a fair value assessment will depend on, I suppose, so if you are charging your own fees, there is a section under the new rules which asks a series of questions. That asks a series of questions that firms will need to answer and follow. So there isn't a template as such. Obviously, we've created one, but it'd be quite different as a manufacturer of a product.
Thank you. And then we've got a couple of questions about timings in terms of us sharing the products with distributors. As Pippa said, they're due by the 30th of April. We're working really hard to get all that work done here. Ideally, we'll get them out as soon as we can. In reality, I think you'll find with most manufacturers, most lenders, they will be with you towards the end of April. And I think that's the reality in essence. And I think I saw one more question pop up. No, that's gone. So that's fine. And in terms of the question pop up, will you be sending this out or do we need to request it? So the fair value assessments will go out to all of our introducers.
The distribution strategy will be
the distribution strategy. The fair value assessment is ours, yes.
It is important to note that if you haven't received a distribution strategy from a lender for their products, the rules do state that you shouldn't be distributing the product if you haven't got that distribution strategy, which sets out how it should be distributed. So if you don't get one and you have got a lender on panel that you want to use and you haven't had it, I would reach out to them to ask. But the expectation is that your lenders will send you something by the 30th of April.
Excellent, thank you. And then some questions on the slides and the whole video. So we will be sending the link to the slide, the link to the video session and the slides out for you in an email after this session. It will go out in the next couple of days. And then there's another one saying, do we need to share these with our introducers? I'm assuming that's the distribution strategy that the question is about. A little bit more information on that one, please. If possible. So I think in terms of introducers, if that individual's referring to ARs, is that, Pippa, is that something that you could cover?
Yeah, so if it's a principal AR relationship, it's the same as today. The principal will remain responsible for the activities of the AR and ensuring that they comply with the terms of the duty. If the principal has received a copy of all the distribution strategies and collates it into one, and they've created their own, that can be distributed to their ARs. It will depend on the nature of the relationship between the firms.
And then a little bit more clarification. What about if an introducer works directly with a manufacturer and that manufacturer introduces clients to that introducer?
The same rules will apply because they will be within the distribution chain. So this applies all the way across the distribution chain. So it will apply in exactly the same way.
And then another question, if products relate to both regulated and unregulated business, presumably no requirement to share with introducers of only unregulated business, is that correct?
Yeah, if they're only dealing with limited companies or PLCs or corporates that are purely unregulated customers, then no, they're fully out of scope as they are today from FCA rules. There's no the perimeter from what we know it today hasn't changed. So the consumer duty just applies in the same way it does with the existing rules. There's a question on, are you expecting to change the terms and conditions of your agreements? Or will you provide explanation of key terms, risks of products in a different document? So you'll be provided with a copy of our distribution strategy, which will explain how we expect the product to be distributed. The terms and conditions aren't changing. Potentially in the future they will be re-looked at to make them perhaps more concise and simple in wording. I imagine that a lot of firms will be reviewing their communications, but that's not a hard deadline for the 30th of April. We've got until July to work on communications agreements, key risks of products, etc.
Brilliant. We haven't had any other questions come in, so
I can see one question in the chat. If a customer introduces themselves to us, how does that fit into us as distributors?
They're part of the distribution chain, so they are also a distributor. So anyone that's distributing or within the distribution chain, they're caught, or the duty applies.
okay, and another question in the chat. What's meant by communications? Does this extend to social media?
Yes, any communications in any form, websites, social media, yeah, anything.
Great. I think that's probably it. I'm conscious of time. It's 10:59. We've gone right up to the wire of 11 o'clock. So I think that's it. If you've got any other questions, excuse me, do feel free to forward them in either via your account manager or directly to myself. That's fine. My email address is joanna.morris@novuna.co.uk. And we will, as I said, we'll send out the recording and the slides to you all, and to those people that couldn't make it. So thank you very much for attending. Thank you, Pippa. Thank you, Pippa, for doing such a great job of what is ultimately quite long-winded and wordy material. And thank you all for attending today.